Hello everyone, I am Adarsh, lecturer in Vidhyaashram PU College, the Temple of Excellence. We are in the 7th session of your accounting ratio. This is the last session on your accounting ratios. Now, in the previous session, we discussed about what is called ratio, and also we did many problems on types of ratios. In the today's session, we'll discuss about profitability ratio. We'll do one problem as well as the remaining ratios also we will discuss. Now, this is your problem number 2, our second problem on profitability ratio. So, all the informations are given. You have your gross profit, net profit as well as your sales also given. Remember, what do you mean by sales? It is nothing but net operating revenue. The revenue from operation is called as sales. Revenue means what? Income. Yeah. What you have to find out? You have to go for gross profit, net profit, operating, inventory turnover ratio, trade receivable. The last part is trade payable. We'll go one by one. Now, we'll go for gross profit as well as net profit ratio. Hope you remember the formulas. We'll do one by one. First one gross profit and second one net profit. Now, what is your gross profit? 4 lakh. It is compared with what? Your sales. Your sales is how much? 10 lakh. Now, your gross profit is 4 lakh divided by 10 lakh multiplied with 100. Why that 100? To find out the percentage. Now, if you go for net profit, 80,000, again your sales is 10 lakh. 80,000 divided by 10 lakh multiplied with what? 100. We'll go to the answer. See, your gross profit ratio as well as net profit ratio. Now, you know the formula. Gross profit divided by net revenue from operation. Always remember, net revenue from operation as well as sales, both are same. Now, as you know, it is 4 lakh, it is 10 lakh multiplied with 100. Your answer is 40%. Similarly, your net profit you got 80,000 and 10 lakh. If you multiply with 100, your answer is how much? 8%. This is all about your gross profit ratio as well as net profit ratio. Simple. Clear? We'll go for the next one. We completed this one and this. Operating ratio. We'll go for the operating ratio. As I told you in the previous session, these three comes under profitability ratio. These three comes under profitability ratio. These three comes under turnover ratio. These three profitability and the last three comes under turnover ratio. We'll go for operating ratio. Operating ratio. What is the formula? Operating means what? Your operation cost, the direct as well as indirect cost. To run your business, whatever cost incurred, it may be for raw material as well as it may be for your general expenses, administration, selling expenses, everything comes under your operating cost. Clear? Yeah. Now, what is your formula? Cost of revenue from operation plus operating cost divided by net revenue from operation. So, what is the net revenue from operation? Always remember, net revenue means sales. What is the net revenue? Sales. Sales already we calculated. Your sales amount is 10 lakh. It is already there in the question directly. So, we have to take sales as 10 lakh. Now, we have to find out what is the cost of revenue from operation as well as operating expenses. Now, you have two options for cost of revenue. Now we are finding out this one. Cost of revenue from operation, you have option number A, option number B. In your examination, you can go for this one or else you can go for this one. Anything is okay. Now, first we'll go for option B, then I'll come back to option A. If you want cost of revenue from operation, what is the formula? Very simple. Sales minus gross profit. In the question they have given sales is 10 lakh, gross profit is 4 lakh. 10 minus 4, your answer is this one, 6 lakh. You got first one. You have to find out second one. Clear? Yeah. You got first one, 6 lakh. Sir, I don't want to go for this formula. I will go for this. You can. For the calculation, the answer will be same, 6 lakh only. But for this calculation, instead of sales minus gross profit, you can go for opening stock, purchase, wages minus closing stock. I'll go back to question so that it will be more clear. See. Now, your purchases how much? 7 lakh. Your wages 1 lakh, as well as your opening stock is how much? 2 lakh. Now, how much now? 2 plus 7 plus 1. Total it will be 10 lakh. How much it is? 10 lakh. From this, what you should minus? Closing stock. If you minus closing stock from this, 10 lakh minus 4 lakh, your answer is 6 lakh. You can go for anything. This is option A. If it is option B, your sales 10 lakh, your gross profit 4 lakh. 10 minus 4, it is 6 lakh. You can go for option A also, option B also. As per my suggestion, always go with option B. Why? Because simple it is, your sales and minus gross profit is your cost of revenue from operation. Clear? Yeah. Yeah. Now, so now we are clear about this 6 lakh. Now, how about your operating expenses? How to find out operating expenses? These operating expenses you will get in the question. We'll go back to question. It will be easy for you. Your operating expenses, it comes after your gross profit. Now, which are the operating expenses? You have administration, you have selling. These two we call it as operating expenses. Other than this, they can give salary, or as printing and stationery, or electricity bill. All comes under operating expenses. But remember, if it is financial expenses like interest paid on loan, interest accrued, interest payable or interest paid, all will not come under your operating. Financial expenses will not be part of your operating. Operating expenses in this problem, one is your administration and other one is your selling. What is your operating now? 3,40,000. We'll go back to answer. Now, so your operating is 3,40,000. How? Your administration 3 lakh, selling is 40. Total it is how much? 3,40,000. Now, come back to your formula. Cost of revenue, you got 6 lakh. Your operating expenses, you got 3,40,000. 6 plus 3,40,000, your answer is 9,40,000. Now, divided by what? Net revenue. Revenue means what? Sales. Now, your sales is how much? 10 lakh. 9,40,000 divided by 10 lakh, multiply with 100. What is your percentage? Operating profit ratio is 94%. Clear? Yeah. Operating means, remember, to run your business, whatever expenses you make except financial cost. Clear? Yeah. This is all about your operating profit ratio. Now, we completed gross profit, we completed net profit, we also completed operating ratio. Operating ratio little bigger one. Other than this, everything is small. Okay? Yeah. Now we'll go for inventory turnover, trade receivable and trade payable. Remember, trade receivable, wherever you get the word receivable, it belongs to sales. Trade payable, payable means you have to pay. To whom you will pay? From where you have purchased, for them you have to pay. So this belongs to purchases. Receivable means what? Sales. Payable means what? Purchases. Sales deals with what? Debtors. You have sold your goods, but money has not yet collected. For them, what do we call? They are called as debtors. Now, for purchasers, yeah, for purchasers, it is creditors. Yeah. For sales, what? Debtors. For purchases, what? Creditors. Always you have to keep it in mind. Any information about receivable turnover ratio, two things you have to remember. One is sales, other one is debtor. Anything about payable turnover ratio, you have to remember. One is purchases, other one is creditor. Clear? While doing problem, again I'll explain you. Okay? Yeah. Now we are going for inventory turnover. Inventory means, remember, it is stock. Yeah. Inventory turnover ratio. What is the formula for inventory turnover ratio? Cost of revenue from operation. You have to remember this. Why? Because we already done. What is cost? Sales minus gross profit is your cost. Your sales is how much? 10 lakh. Your gross profit how much? 4 lakh. What is your cost? 6 lakh. Whatever 6 lakh we have taken for the previous formula, same 6 lakh will come for here also. Now, so cost of revenue from operation, you are clear, it is 6 lakh. Now, you have to find out what is average inventory. In few question paper, they will give you average inventory directly. If it is not given, inventory means what? Stock. What kind of stock you have? We'll go back to your question. Now, what kind of stocks you have? Only you will get two types of stocks. One is what? Opening stock. Another one is what? Closing stock. Opening stock how much? 2 lakh. Closing stock how much? 4 lakh. How to take average? 2 plus 4. How much? 6 lakh. 6 lakh divided by 2. Why it is 2 means we are taking average. Now, 2 lakh plus 4 lakh, it is 6 lakh. If you are taking average means 6 divided by 2 lakh, your answer is 3 lakh. This is called average inventory. What is that? Average inventory. We'll go to answer. In this, as I told you, we already got 6 lakh. How come you got 3 lakh? Just I explained you. Your opening stock is 2, closing stock is 4. 2 plus 4 is 6 lakh. Divided by 2 is how much? 3 lakh. So, as I told you, your turnover ratio always comes with times. So, wherever you get multiplied with 100, then it is in percentage. We take it in times, not percentage. Clear? Yeah. This is all about your inventory turnover ratio. Your fourth part is over. Now, gross profit done, net profit over, operating over, inventory turnover also over. Now, two things are remaining. Those are, one is receivable, other one is payable. If I say receivable, two things you have to remember. Which are those? Sales, debtors. If I say payable, two things you have to remember. Which are those? Purchases as well as creditors. We'll go for that. Yes. Last part of your question is, one is trade receivable turnover, another one is your trade payable turnover. So trade receivable turnover, what is the formula? Net credit revenue from operation. Revenue means what? If the word you find revenue, it is called as sales. Sales already you know, we have already taken that your sales is 10 lakh. Once if you read your question, you have to remember few things. Gross profit, net profit, sales. Why? Because we use it everywhere. Okay. Now, sales you got. Now, what is the average? Wherever you find average, remember, you have to take two things and you have to divide by 2. Now, average trade receivable. How to get average? If you go for opening, if you go for closing, total and divide by 2. I'll go back to your question so that it will be easy for you. Now we are doing your receivable. Receivable means what? Sales and debtors. So we should go for creditors or debtors? We should go for debtors. Why? Because we are doing receivable. Now, what is your opening? 3 lakh. What is your closing? 2 lakh. 3 plus 2, it is 5 lakh. Divide by 2, your answer is 2.5 lakh. Easy. Clear? If we go for payable, the same thing. We will go for opening. We will go for closing. 3 plus 3 is equal to 6. Divided by 2 means 3 lakh. Simple. If it is average stock, opening stock plus closing stock divided by 2. If it is average trade receivable, opening debtors, closing debtors divided by 2. If it is average trade payable, opening creditors plus closing creditors divided by 2. So these are the logics you have to remember. We'll go to answer. So in this, no need of any explanation. Why? Because you already learned how to find out average receivable. Now, your average receivable opening is 3, closing is 2. Total 5 lakh divided by 2. Your final answer is 4 times. Why it is not in percentage? Why? Because we have not done multiplied with 100. These are called turnover ratio. Turnover ratio always comes with time. The next one is trade payable turnover ratio. So what is the formula for trade payable turnover ratio? The formula for your trade turnover payable ratio is, it will be, always remember, this will be average trade payable. So I am doing this. Why? Because to make you to understand how to calculate. Now, average trade payable. So what will be this one? This will be your net credit purchase. Net credit purchase. So this will be your trade payable ratio. Now, how to calculate this? You have net credit purchase divided by average trade payable. Net credit purchase you will get from the question. Now, average trade payable, just I explained you what is that. Very simple. Payable means what? Two things, purchase and creditors. Now, opening creditors plus closing creditors divided by 2, you will get your average trade payable. We'll find out that. I'll go back to question. I'll show you where you can find these two. Now, so in this, what is your purchase? Purchase is given. It is 7 lakh. You got one thing. Your net purchase means how much? It is 7 lakh. Divided by what? Average trade payable. Now, how to find out that? See, your average trade payable is 3 lakh plus 3 lakh, it is 6 lakh. 6 divided by 2, it is 3 lakh. You got your answer. Your purchase is how much? 7 lakh. Your average is how much? It is 3 lakh. We'll go to your answer. Yeah. Net credit purchase already we got, it is 7 lakh divided by average trade payable. The formula is opening creditors plus closing creditors. Opening creditors how much? 3 lakh. Closing creditors how much? 3 lakh. Total it is how much? 6 lakh. Average means always it is 2. You are taken 2 numbers means you have to divide by 2. If you are taken 3 things, then it should be divided by 3. Okay. So average 6 lakh divided by 2 lakh. Your answer is 3 lakh. Now you got your average trade payable. Your average trade payable you can take it as 3 lakh. So the answer should be written in ratio or in percentage or in times. It should be in times. Why? Because this is turnover ratio. Now your answer is 2.33 times. This is all about your profitability ratio. So what is the answer of your trade payable ratio? Is 2.33 times. Now we completed gross profit, we completed net profit, we completed operating, inventory turnover is over, trade receivable over, and I worked out trade payable ratio also. This complete problem will come for 12 marks. For that what you should do, you have to take a sheet, you have to write down one by one. Gross profit, what is the formula? Net profit, what is the formula? Operating ratio, what is the formula? In a white sheet, you have to write one by one so that you can remember all the formulas. Now, so these are the remaining ratios you have in accounting ratio. Normally what we did in the previous session and today's session, the examination question will be asked on those ratios. These are the remaining less important topic, but also safer side will do each problem on each ratios. Now, the remaining ratios are, one will be your earning per share, return on investment. We also call it as ROI. Whatever you invested on that, how much is your return? The last but not the least, that is working capital. Working capital means what? On your day-to-day business, whatever expenditure you make, that is called as working capital ratio. These three are very important. With a small example, I will explain you. Earning per share. Now, what is a share? There are two types of share. One is equity, other one is preference shares. Now, for example, what is your profit? Your profit may be 10 lakh. What is your profit? 10 lakh. Number of equity share. They are not asking value of equity share. They are asking you what are the number of equity shares you have. For example, you have 1 lakh equity shares. Numbers. 1 lakh equity shares. What is your profit? 10 lakh. What is the number of equity you have? That is 1 lakh. If you divide this, what is your answer? 10. So each share you will get 10 rupee. That is called earning per share. Each share you are earning 10 rupee. If you have 2 lakh share, it will be double, because if it is profit is more. Clear? Yes. This we call it as earning per share. So if they ask you in examination means These two will be given directly. No need of any calculation. Your profit available to equity shareholders will be given, as well as number of equity shares also given. Just you have to place with numbers and you have to divide. Your answer is what? 10 rupee per share. Clear? This is about your earning per share. Now we'll go for the second one. Return on investment. Normally, if you are investing in shares or mutual fund or any deposits or something, you will expect what will be your return. So for that, what is the calculation? Now, the calculation is very simple. Profit before interest and tax. This will be given directly in your question paper. Profit before interest and tax. Sometimes they may give you profit before tax. Then you have to add back interest. We already did one problem on this in the previous session. Okay. Yeah. Profit before interest and tax divided by capital employed. Capital employed we already calculated in the previous session. What is capital employed? There are two formulas there. One formula will be your total equity shares, your total reserve and total profit is called as capital employed. So whatever capital employed, for example, profit before interest and tax, it may be 10,000. Your capital employed, it may be 10,000. If you divide, what is your answer? 1 rupee. Return on investment. If you invest something, you will get return. I'll give you best example for more understanding. Instead of 10,000, we'll make it as 12,000. 12,000 divided by 10,000. What is your answer? 1.2. If you spend 1 rupee, what will be your return? 1 rupee 20 paise. Means 20 paise you are getting more. That is only your return on investment. Clear? Yeah. The last part is working capital ratio. What is working capital means? There are two types of capital. One kind of capital, that is your initial investment. What is working capital means? To run your business for every month, every week or per day, what will be your expenses? That is called as working capital. To run your day-to-day business, whatever expenditure or spending you make, that is called as working capital. Now, net revenue from operation. As I told you, revenue means what? Yeah, sales. In your previous problem, how much your revenue? It was 10 lakh. Now, revenue from operation, it may be 10 lakh. Working capital will be given directly in your question. No need to bother, no need of any calculation. Directly it will be given in your question. The working capital, it may be 5 lakh. 10 lakh divided by 5 lakh, it will be 2. Not lakh, it will be 2. Okay, so these are the remaining ratios in your ratio analysis or else accounting ratios. So in the today's session, we discussed about profitability ratio as well as turnover ratio. How many ratios you have? You have 4 types of ratio: solvency, liquidity, efficiency and profitability. So on efficiency, we have done problems. On profitability, we have done problems. On liquidity, also done. Solvency also done. So we worked out all kind of ratios with explanation. If you follow all these sessions, total we have 7 sessions for your accounting ratio. If you follow all 7 sessions, 19 marks will be yours. So this is one of the important topic. You have to take a separate sheet, write down each ratio with formulas, and if there are any sub calculations are there or notes I have given in the middle of every session, please work out those, concentrate on those, and you can get 19 marks if you concentrate on all these sessions. Thank you.